We also welcome on board Upasana Chachra and find out what she's making of what to expect from the policy today. Upasana, hi. I guess it seems like it's going to be a given, a 50 bips hike, but do you think any change in stance? Could we expect that?
Hey, we also expect another 50 basis points rate increase in this policy. So taking the repo rate to 5.9%. I think on the stance, it will be a close call. We are currently not expecting a change, but I think it will be a close call given that repo rate is now going back to 5.9%, quite similar to where the 2019 level was, where the RBI started cutting before the pandemic.
Okay, Upasana, but are you expecting some sort of liquidity measures, tightening measures as well? Because we have seen over the last month or so, the liquidity has already got tightened a bit. Are you expecting anything more on that account?
So liquidity, interbank liquidity has fallen quite at a very rapid pace in the last couple of months, and we did see that tighten very to very low levels in the last 2 to 3 weeks, and that is pushing up weighted average call rate. So I think we will be looking for what the RBI's view is on this, because if you recall, the RBI stance had been to manage the surplus liquidity in the system over in a very non-disruptive and multi-year sort of a framework. But nevertheless, the liquidity conditions have tightened very rapidly. So we will be looking for what RBI thinks about this, and probably not looking for any structural measures from the RBI over here, but maybe some short-term measures which can allay any short-term supply-demand mismatches on the liquidity, especially as we enter into the second half of the year, which is generally has more drains on liquidity with the onset of the festive season.
Uh, we've heard global central bank policies as well, and we're clearly coming in after that, Upasana. Fed hiked the policy rates by 75 bips for a third consecutive time. Inflation in US continues to be elevated clearly. ECP hiked rates by 50 bips. Will continue to hike until inflation comes back down to 2%, is the commentary coming in from. And yesterday we heard the UK PM as well, opine on the state of the economy. Wanted to understand what inflation estimates are you working from, and what is it that we're likely to hear from the governor today?
See, inflation in India has also been sticky. We are seeing inflation, close to the 7% mark in the last couple of readings, give and take a few basis points here or there. I think inflation for the near term, especially if say the September and October months, will also probably be at or above 7. We are seeing upward pressures from food inflation side. So high frequency food prices, especially for cereals, pulses is picking up. So is for vegetables now. So at the margin, there are upside risks coming from the inflation side, mainly from the food inflation or the cereals pulses side now. And the monsoon, while okay, has been patchy, and you've seen that area under sowing for cereals and pulses has also been lower. So in terms of our inflation numbers, we are looking at 7 to 7.4% in the next 2 to 3 readings, and thereafter to gradually decelerate. We see inflation going below the 6% mark somewhere by the end of 1Q23, but we do see upside risks to the trajectory, mainly due to this uncertainty that's cropped up on the food inflation side. So in terms of what the RBI says, we'll be basically looking out for what what their trajectory is for inflation in the last 2 quarters of this fiscal year. Currently, they are looking at inflation going below 6% by the end of the year as well. So, what if there's any changes or tweaks, given obviously RBI cares for the 6% mark, and the first goal for them would be to bring inflation below that 6% mark, and that will be pretty important to track.
Okay, so that's about inflation. Whether the exit rate for FY23 is 6% and that happens only in FY24 is the big question to ask. We're just counting down to the policy, just 2.5 minutes left to that big event. But Upasana, okay, 50 basis point this time around seems to be factored in. But how long do you think this aggressive rate hike could continue? Are you expecting 50 basis point hike to continue in the coming policies as well?
So for now, our view is that we get so we are working with a terminal repo rate of 6.5%. So after the 50 basis points today, which we think should come by, we are looking for a 35 basis points increase in the December review, and thereafter a 25 basis points in the February review. So that's where we think the terminal repo rate settles finally at 6.5%. Our thesis is that inflation decelerates to around 5.5% by second half of next year. So that's a more normalized level of inflation that we are working with, and that gives you about 100 basis points of positive real rates. I think in the end, I'll just highlight that probably there has to be a premium on maintaining macro stability in this very challenging external environment, and therefore normalizing this monetary policy is probably the need of the hour.
Okay, Upasana.